Hey, Steve, Andy, what's up?
All right. Hey, Scott. Hello, Andy.
Hello, Steve. Hi, Scott. Hi, everybody.
Happy Tuesday, everybody. It's that time of week again for the Trade of the Week afternoon webinar Trade Ideas. So let's just get right into it. Now, I know you can see my screen and hear my voice. So as people trickle in, the seasoned ones know the first couple minutes here are the same slides, but we'll get through them. The trade of the week is not to be construed as financial advice, and this slide is reminding you that we're software publishers. Andy and myself might give out some ideas or some opinions, but anything we say or show you or demonstrate here should not be construed as financial advice for you guys. If you need that advice, you got to seek out the right people and pay them a fee. All right, you're not alone with Trade Ideas. It's a 14-plus-year-old product. It's very in-depth. It's not something that can be learned overnight. Even the test drive people that take a 5-day trial feel like there's still a lot more to go, and they a lot of times pick up a month after that. So we recognize that, and we do our best to try and onboard everybody as quickly as possible and cut that learning curve down as quickly as possible. A few of the ways we do that is Barry's Trading Room, the live trading room every day. It's free, which is a great price considering the quality that you experience you get there. A handful of great traders kind of take the lead along with Barry, and they're active, primarily active day traders, mostly active in the first couple hours of the day, and they taper off as the day goes on. But the good part is you can join and you can ask questions. If Barry doesn't help you, other traders might, especially with Trade Ideas questions. He can demonstrate something for you. A lot of times Barry has to remind us in the support group that if somebody's having a hard time understanding something and they're not aware of the live trading room, please send them in and he'll demonstrate. So keep that in mind if that sounds like you. We have the afternoon webinars, theme related usually, Monday, Tuesday, Wednesday, and Thursday. Tomorrow, I don't believe we're having a webinar tomorrow. I believe it's canceled, but Thursday, Andy will be back with Jamie talking about what's happening during the Thursday session. And Friday, we don't have afternoon webinars. We have a morning session for 3 full solid hours. So if Barry's live room isn't enough, we have even more focused support between 11 and 2 Eastern on Friday. Every Friday, it's myself and Jamie and Sean and Andy, and we knock out, question from a few dozen people that show up and come and go and ask questions and need demonstrations. And whatever you want to talk about, we'll do our best to try and demonstrate that every Friday for 3 hours from 11 to 2. And then lastly, the TI University. I just did the 201 class this morning. It starts every Monday and finishes on Thursday of each week, repeats and starts over again the following Monday. The beginner, Monday, Tuesdays, more beginner stuff, and then intermediate tomorrow and more advanced with Sean and Jamie on Thursday. We also have a 4-part video series recorded. If you need a copy of that, you can request that. We can drop that. But that's also free, and it's over 6 hours of good content live every week, or if you want to watch the 4-part video series, you do that as well. So all that said, here we are again, another week gone by. The theme of the webinar this week is the trade of the week, which we will talk about. But just a reminder, the theme is the slide is always man and machine combined. It's the world in which we're gonna be walking into. My daughter is getting ready to finish her residency, another 9 months of residency for registered dietitian, and she's already seeing the way in which they're moving forward in their industry, taking giant data sets and working with AI and smart technology and letting that data set come back to you from the technology in a curated form and make decisions based on a high concentrated, good curated effort. And so that's really what Trade Ideas is doing. I think we're ahead of the times, and it's just the way the world is going to kind of adapt to everything around us, no matter what industry you might be in. But we're in the financial industry, and that's what we're going to talk about. And so just a reminder that Trade Ideas is a great platform to help the human being make great discretionary decisions off of a nice curated list of things, because it's a lot of noise out there. It's like drinking from a fire hose if you don't have something like Trade Ideas to kind of settle it down for you and make sense of it all. So it's June 11th, and we'll keep with the theme of the last few weeks. I'll do a market recap here in a minute. Interesting, very interesting price action the last week. We'll do a Holly recap, kind of a quiet day, which in and of itself can be always telling as well. If the AI is having a hard time making trade selections and being active, then you might want to consider doing the same because there's not as much opportunity out there. Trade of the week is U.S. Steel, and it's working. We'll talk about that and how it came about and what we thoughts were. And then we'll take a look at some sector glances again. We did that last week, and we'll take a look at the alerts that we set last week. I think they did pretty decent. And I've got an unusual kind of a list today to set some more alerts. And I put chart requests in there, but that's always at the end. If we have a few moments at the end, somebody can slip in a chart time permitting, we can go ahead and do that. So let me get rid of the slideshow here and grab my little pointer. Stretch out the S&P. So we did a little bit of homework yesterday. If you were with us yesterday in Jamie's webinar, I did some movement of these orange lines and I saved them. I'll talk about what I did here. You know, prior to that, these orange lines, they were up at the new all-time highs, showing kind of a double top there. Well, yesterday I thought it was kind of interesting, and boy, funny as it is, today kind of echoed the same sentiment here. Looking left, we have a lot of, well, I don't get ahead of myself, but we had a pretty interesting looking candle yesterday that I thought was going to be a nice bookend topping tail. Well, it took us until the closing bell today to kind of figure out that we weren't really going to improve much on yesterday's candle, but boy, I didn't see that coming. I even mentioned in Jamie's webinar yesterday, I chose my words very carefully. I said, I would be very surprised to see us trade higher than this topping tail yesterday. So therefore, I can only just say color me surprised, because I didn't think we'd be up in this area. I thought we'd be back down below this orange line. So today's action opened up strong and never really went anywhere. It just kind of settled back down into where we were yesterday. So I'm drawing this new line again, resistance over here, support, resistance. So already, you know, we're starting to see a pattern that this line is becoming an inflection point, or a pivot level, if you will, underside and then overside. Zoom out a little bit more, we get rid of that. And so this is, and if we even come over here, it even has some relevance back here in these price levels. So this is kind of, I think, if we can get a resolution back into the range tomorrow, let's see if this level holds. This is obviously a really key level. Yesterday was kind of the closing price, and today it was kind of the closing price. So even though I drew this line yesterday, today's closing candle settled right in there. So back to the other lines, I think we need to draw some support lines down here on this double bottom, without a doubt. So there's probably our new range, if we could get a little bit of weakness to settle back in. And then the midpoint is kind of right there in the middle, as it were, and it's also relating to some prior resistance and support pivot lines. So these seem to be the new levels of interest for me going forward in the SPY. Now let's go back a week. Remember when we looked at this candle last week, I mentioned, for those that weren't aware, it was a nasty gap in a reverse direction. You know, we had the market had everybody leaning this direction, and a lot of times the next day we might see a gap down. But we didn't have that. We had a reverse gap. We had a gap up right in the middle of everybody leaning short. So this is extremely strong. I'll draw a double arrow for extremely strong. And I mentioned last week, don't take this lightly. These gaps, pro gap is what they're called, a pro gap. I don't know why they call it a pro gap. Maybe Andy knows. But the pro gap usually has some inertia and some energy behind it. And so I mentioned after our webinar, don't take this gap lightly. And well, I guess it was good advice. I'll be honest with you, I did not see the incredible bounce coming much beyond maybe a couple of days. So when we just kept on going, it's pretty impressive. And so here we are back into today's candle after yesterday's candle, two kind of ominous looking bookends, I guess, for lack of another word. But what we want to avoid here, and I saw StockCats tweet this, and he's exactly right. We can't just get caught up on this one red candle. Yeah, there's a lot of red there after a big up move, but we still kind of closed unchanged for the most part. And what we don't want to see, I shouldn't say what we don't, if you're somebody who's thinking the price action is going to revert and pull back and maybe take a breather, and you're going to play accordingly and base your decisions on that notion, well, we don't want to see the price action take out today's high. That's just going to be what we would call a red bar ignore almost. You have green, 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 throw a red bar in here, get everybody salivating, thinking it's time for a pullback, and then fake out. And we know this market has the ability to fake people out. Another fake out higher would be very difficult if you were looking for a pullback. So I've got some setups a little bit later, and there's going to be a few shorts in there because, quite honestly, when we have this action that we've had, there's not a lot of great setups to the long side. Everything looks like it wants to take a breather. So we'll get back to that. We're going to focus on that, but most of our focuses are going to wait for confirmation of taking out today's low before we start looking at possible short sells when we get later in this broadcast, looking at some possible setups and marking up the price alerts. So those are the notable ideas that we had. We had an extremely strong bounce off of these lows. I think this is going to be our new range here, these orange lines that I drew. Again, I drew these yesterday. I've left them in there today. They're still relevant at the moment. That's where we closed. I still kind of feel like we're going to see some sort of softness in price, maybe the gap down overnight. I don't know. But when you have this much of a bounce, it's really hard to find good long setups, and we will get to that when we get to that portion of the webinar. So backing out a little bit, there's the bigger picture. Pretty vicious bounce. So a lot of times why you don't, if you're going to be a short seller, you don't want to wait until it feels safe to go ahead and start shorting stocks down here after they've broken, because crazy markets have the ability to do something like that to the short sellers. Let's look at the NASDAQ, see what's going on over there. Same kind of a deal yesterday, big long topping tail under the 50-day. I kind of thought that was extremely significant. So once again, that candle, we actually closed positive in the NASDAQ today. Need to see confirmation of taking out today's lows for some sort of, on what I feel, I keep bringing this up, I feel like we need some sort of nice little couple-day pullback into these moving averages, and then we can catch up and then maybe make another bullish assault. We'll see, but too far too fast is definitely what we have had so far, which reminds me, I'm going to go back in time a little bit. And today isn't really as a good example, although we did have one point of interest, but I want to remind people how simple, because you don't see this too often. This was a nice 3-day face-ripping rally, and the way in which you stay in good trades, if you're long and participating in this, going back in time, as you look through, I'm going to scroll back here and do the old back in time. So here's the face-ripping pro gap right here, grabbing everybody by surprise. And then what I want to look at is how the price action never really violated the intraday 10 period moving average. So as we move forward, this first day was held all day long. Look what happens the next day. We come in, we gap down, and what catches the gap down? The rising 10 period. And for the rest of that day, the rising 10 period is the guiding hand that holds. Even this little fake out here. Let me zoom in so we can see a little better. 2 days in a row, all right? Then we get into the third day, another minor gap, but is supported once again by the 10 period moving average all day long. 3 days in a row, fourth day, blowout. We get to the top, moving average catches up, and this is where the price action starts to get a little sloppy towards the close, which we would probably anticipate after a big move. And then, by God, once again, here's the big gap up yesterday. But this was a very significant moment yesterday in the price action right here. This is where it took 5 days for the intraday 15-minute chart to finally post some closing candles below the rising 10 period. And then what do you know? From there on, the price action became oppressive to the top of the candles and started forcing the price action lower. And then we come to today, and then today we only had one real interesting inflection point. The market could have just as easily gapped up like it had every other day, found its footing right there at the moving average, and then moved higher, but it didn't. So today we kind of had an early warning system that it was all going to break down. It all got real sloppy and messy right about there. And so for the last 2 days, this moving average hasn't really been able to tell us too much other than momentum is broken and momentum is sloppy up here at these levels. All right, so getting back to the NASDAQ, a little bit of a stronger close for sure than the S&P. The IWM is still playing the games. It just refuses to get above. Now the moving average for the 200 is down sloping. I mean, this thing has been playing catch up forever as the rest of the indexes have been trying to get up here to highs. And so now, we need to definitely move that line. The first level of inflection, I think, is kind of interesting. I'll just leave it there for now. But you can just see the relative weakness of the small caps. What this means is the market is, investors, I should say, there's not an appetite for higher risk, meaning smaller cap stocks, the smaller stocks looking for higher risk. They're still just pouring into the big caps, the FANGs, the technology stocks, what have you. The smaller stocks are being overlooked, evidenced by the IWM. And then the Dow is very much similar to the S&P. And boy, that's a bad tick. Got to disregard that. But nothing much to see over there. So going forward, I think the real story is that was quite a bounce. That was quite a neck snapping pro gap. 5 or 6 days of momentum, solid 10-period moving average that we just followed in the 15-minute. It's time for a rest, and the last 2 days of choppiness have showed us that. Now, the most bullish of all scenarios might be maybe the price action just goes sideways for a couple of days. Well, that would be extremely bullish. I'd be very concerned if I was short for a possible move higher out of that. So pullback is desired. Sideways action is extremely bullish. That would be even more desired if I was a bull looking for some sort of pause in the action and then a reset to move higher. But I feel like we're due for that. And today, I really was surprised that we floundered around as much as we did and didn't kind of give a little bit back today. Andy, what are your thoughts?
Oh, I agree with everything you said. You covered it really well. Yeah, it's a little today and yesterday we tried to gap up and we couldn't hold that gap really for the most part in the spiders. The Qs did a little better job yesterday of holding it up, but yeah, and it's interesting that inflection point that you put in there. Looks like we're gravitating back to that the last couple of days. So I'm with you. I feel like we need a breather. You know, and let's face it, I feel like this whole move is based upon, you know, the Fed's, you know, likely to start reducing rates again, which I really never wanted to see again, but we'll see. I personally don't think it's going to work as well as it did in the past, but time will tell. But anyway, yeah, I agree, Steve. It feels like we've gone a long ways in a short period of time, and we do need a breather. So I think you could use the low end of those two candles right there for a potential.
I drew kind of three scenarios, maybe one pullback to the midpoint, maybe a more shallow pullback, and then maybe even a sideways, which would be the most bullish going. This is what I would expect to see kind of over the last 3 days, one of those three scenarios. I do not expect to see more of this tomorrow, so I'll be surprised.
I know, but
that's just my opinion. I'm just one guy.
All right, but yeah, I agree with everything you said. So I'll just grab it and talk a little bit about Holly. Well, like you said, it was a low count day, so not a whole lot to talk about. But let's see if I click on this. Let me change presenter right quick.
Okay.
All right, you guys got it?
Yes.
All right, good. This is my laptop, so if you guys are not seeing as many windows as you do, it's a little bit smaller than my setup at home, that's for sure. But nonetheless, let's take a look at Holly today. You can see over here on the left side the number of trades. Grail had 6 trades, 2.0 had 7, and Holly Neo had 6. And you know, for the most part, it was pretty quiet. I mean, let's face it, guys, taking a look at the spiders, you've heard us say this in the past, gap ups kind of make it difficult for Holly in a lot of cases. A lot of her filter settings kind of get thrown out of whack, and many times you won't see as many trades like today. It's kind of a low trade count for Holly. For the most part, I don't really need to look at Grail. You can see that risk off 0.05, 6 trades. That just shows me a lot of, well, let's take a look real quick. Let's just go ahead and take a look at Grail. And you can see here a couple of good trades. Float on this right here later in the day. I noticed a couple of float-ons where I think this was in two strategies here. A little different strategy here of stock, you know, been beaten up all day along with the market, and then the stock starts trying to go sideways, pops up out of the range, and this is when Holly calls float on for a very nice, you know, risk on profit, and not too bad on the risk off as well. But you can see down here a couple of trades that just didn't work out. AO tried to take it early, looking for a 5-day bounce, but then the market got a hold of it and just drug it down. All right, let's go to NEO real quick, see what we're looking at there, and pretty much the same thing. I'm trying to see why NEO's number was only down 0.29. That looks, I'm gonna have to look into that, guy. Oh, risk off, I'm sorry. It's on risk off mode. You can see here some of these trades were actually taken with profits. It looks like they're red. So risk off, you can see they're down. Now, this is considering my trade count. You can see my share size over here in this category that you see in here in the channel bar. It's just looking at if you were to invest in one trade of every call, that's what you would win or lose. So risk off per share, yeah, one share for every trade would you lose 0.29 cents. So not a big loss. And once again, mine factors in a share size. And let's take it over here to Holly 2.0, which was really the only one that was that showed a decent profit today, and that was based on full risk. And what that means, guys, it means if you ignore the stops and you stayed in your trades, we added this full risk column because people would like to know what would happen if they just held on to everything to the close. And I think it's a good thing to know. This is something we can track, that we can measure, and over time see what happens. That's good data, and we will obviously be sharing that with you in the future. Love, of course, this one would have been a tough one. You can see there in full risk profit. $432. I'm sorry, guys. My daughter just walked in with a little kid. I don't know why she would put me through such punishment, but risk off. You can see that was a stop out in Love. Kind of a dangerous. If you're paying attention to this, guys, you would have noticed this had earnings date. That was earnings this morning, or actually, yeah, that was earnings this morning. So, yeah, that would have been a gutsy play on the first drive down to turn around and get short. I mean, sometimes these can pay off. They just keep going lower and lower. You've seen that way before, but other times you get this head snap back before it does finally roll over. But nonetheless, we do count in full risk. You hold it all the way until 5 minutes before the close, and that would have been the profit. HMI was a nice little trade today. And look at this one. This bucked the trend all day long, pretty much. Market was going down all day. This one just kept running higher, and nice risk on profit there. And then, of course, we had some ones that just did not want to work. This looks good. Initial thrust higher. It looks like it's going to reverse right here. Bam. Market got a hold of it, threw it back down. So all in all, Steve, not a bad day for Holly considering the market that we had and the gap up. We know that's going to be difficult for Holly, but still a profitable day in 2.0. The other two just kind of a couple of losers and a couple of winners, but a couple of decent trades are in full risk on Holly 2.0. You got anything you want to add to it?
No, just that when I do the 201 sessions every Tuesday as well, I'm kind of saying a lot of the same things. And what I was saying earlier was the bigger pictures items weren't there. There was no real directional bias. There were longs and shorts coming together. There was no real risk on or risk off consensus among all three Hollies. Also, probably worth talking about. We are going to be moving the three Holly segments back to one Holly. I know Barry's been mentioning that announcement in his room, and I'm all for it. I think it creates a little too much confusion sometimes, and we're happy about that. So if you're not aware, you're trying to keep up with what's the three Hollies, don't even worry about it. In the near future, they're going to be recombined back into one. It was done for a reason, but that reason didn't turn out to be as important. So for whatever reason, we're going to go back to a one single Holly window, which will be nice. But you asked me what I saw today. I saw a lot of confusion. Saw a low trade count. I saw no directional bias, no certainty of hold time, risk on or risk off working across the board, and it's kind of consistent with what we saw today and yesterday. I know Holly had a little better performance yesterday, but it's a breath. We're taking a breather here after that big bounce, and I think some of the performance today probably demonstrated that as well. And you're right, starting off the day with a gap up is always seems like one hand tied behind the back for Miss Holly. But
All right, I'll send it back over to you.
yeah, that might lower the trade count, Wally, because we're not going to get double trades every now and then. You might see 2 trades in 2 different buckets, and that will certainly lower the trade count. It should. All right, on. Okay, so where are we going here? I think we're going to go to trade of the week discussion. Yes, trade of the week. So, Newmont worked so well a couple weeks ago, and Lyft had a little bit of lift to it. It's kind of stagnant now, but these last few weeks we've been focusing on stocks that have been coming down into a base and then popping up and sideways and building a base and catching those moving averages underneath again, and then boom, popping. Newmont was a great one. Still holding on there. I'm pretty surprised it went as far as it did, quite honestly. There's something definitely happening out there in gold land. So X is something we've been watching a lot of, and it's been called a couple times in the last 3 years of the trade of the week, but it's setting up again. I won't get into the laughable Goldman Sachs downgrades down here after lows, but that was rather comical. But what we liked, we've been kind of watching this one early and often. Bouncing off of these lows gives us a nice kind of a teepee bottom, a panic sell, and kind of a panic buyback. A lot of times you'll see those at bases, just a couple of days of down and back up. If not, sometimes even in one day, just all the way down, all the way back up in a single reversal candle. But this was starting to show signs. What I'm going to do is I'm going to say, back here, no, there's nothing to get excited about here, because I'm going back in time and showing you that there's too much space in between these moving averages that are coming down to greet them. That's a guess at this point. All right, let's move forward a little bit. Okay, another nice day, but we ran right smack into that moving average. Where do you go from here? We're in a downtrend. The price of X could easily hit that moving average after an oversold bounce and roll right back over to fresh new lows. Let's watch it for a couple days. So that's where we were all last week. Okay, watching, it's fighting. Look, it's fighting. Oh, it's closing above. It's 3 days in a row now. It's closing above its flattening 10-day moving average here. This is interesting. And that was really all we really needed into Friday to go ahead and call it. We get a little tiny bit of a gap on Monday. Everybody pretty much got the price if you wanted to. It was close to the trigger price, maybe a nickel above. And then once you're positioned, a nice sweet gap up today, all the way up to 1454. But, it's kind of a testament to swing trading. You just kind of take your position and go to work, and you hope you get the gap ups in some of these things. And the short sellers were getting the gap downs back here, but we'll take a gap up any day of the week. A bit early to start taking profits, I think. There could be more on the horizon, but you see that if you're a short-term trader, sometimes when you get that gap opening, if you're looking on a very short-term horizon, it can pay to take some profits on the opening and take those gift horses in the mouth. Don't look the gift horse in the mouth, take it. And so, but we're not day trading here on the trade of the week. We are swing trading, and I firmly believe that there's more to go. The target that was discussed is simply this declining 50-day moving average, and we really could just be a couple of trading days away from getting there. But going back to my discussion of the general market, if the general market gets kind of soft and pulls back, we could go sideways for a couple of days and X regroup, and then you have another green day. That's probably the best scenario I would hope for. It's been a nice rebound off the lows down here, all the way to the gap up today, which was probably rightfully sold the way the market was behaving. But again, we are in swing trade mode. We'll take each gap up each day, and each net change we'll take until we can get to our hopeful near-term target of this declining 50-day moving average. Then maybe it behooves us to sell half and see if the other half can work through these moving averages like it did down here. But it's the beginnings of a possible turn. I can't look at that and say, hey, it's a complete trend reversal, because it's not. Essentially, the declining 50, if we can get to there, that'll be kind of the first test of a possible trend reversal. So that's always a good place to sell half if we've got some good profits under our belt, and then let the other half work on the house's money, the casino's money. So, that was the stuff that's been kind of working okay lately, as opposed to looking for stuff making all-time highs and those types of setups. So that was one that we were kind of watching, and kind of going into the weekend. We didn't really see much else. Again, the market bounced a lot last week, and there was a lot of tired looking charts out there as well. So looking for something that was maybe digging in and trying to turn around and possible do a trend change. And that's the idea behind X. And Andy certainly was culpable in nudging for this one this week. Yes, influential, the word I was looking for. All right, cool.
Can I add something? I want to add something to the lift. I just want to tell you guys, I mean, even though you know, people get excited about a bull market, but you have to always put things into perspective. And really, we've kind of been in a channel now in the spider. You don't have to pull up the spiders, but we're still kind of a ways from our all-time high. And anytime a lift doesn't look like much of a move, guys, but just putting the naked eye to it from our entry to that top, the high for 2 days there was about a 7.5 or 8% move. Anytime you get that, guys, I know it's not 10%, but gosh, you just got to think. Put the market into perspective. Yes, it's been strong the last 4 days, but we're still kind of in a range, and regardless of what the market's doing, if I get a nice 7.5, 8% move, I'm ringing the bell on something. You know, that's my style. And could you still be in half? Yeah, I mean, I guess you could. It's still kind of in play. It's definitely not, you know, a bearish tape over the last. It's kind of, you know, flat over the last couple of months, and it looks, you know, it could definitely pop up from here and move, you know, out of that range. But man, when you get a nice little move like that, you know, just take some off. It always feels good.
I got a great thing. I'm glad you brought up lift because I want to show. Maybe you know what I'm going to show here. So let's say you missed the lift, and you've heard me talk a lot in the past about, you know, maybe another setup might occur. Well, I get that freaking crosshairs out of there. Thank you. Look at what happened today. On the daily chart, there was the nice 7-8% move that Andy talked about, and then we got our pullback. The market moves. Higher highs and higher lows are what we're kind of looking at here. So still a bit of higher lows, and after yesterday and today, obviously higher lows. But let's say you were looking at this and saying, oh man, Steve's right, man, I can't buy that green bar. This thing's already moved from, you know, whatever this is down here to up here. This isn't a buy point. You know, that's where you would expect, obviously, resistance back here. You'd start to expect some sellers to pop in. Well, it did. So let's say you're watching this thing and you want to be, you know, you want to do the lift 2.0. This is what you want to look for. This was just textbook, and Andy and I have been noticing this a lot more. You know, the entry was just perfect. This is how these friggin' algorithms work. I mean, they're almost like they're OCD. They have to come down here and they have to tickle yesterday's low, which was right there. They have to come down there and spend a little bit of time and look at how the buyers jumped in here once yesterday's low was taken out. After after a soft day of doji, 2 solid days of Ren candle, we come into today, gaps up, fakes everybody out. The early non-patient people said, oh, this is my chance. I missed lift. I got to buy it. And it slowly just squeezes the life out of you for half the day. Comes down here to yesterday's low, and this is where all the magic happens, guys. This is bot land. This is HFT. This is algorithm land right here. Supply and demand did not really dictate this move. I think just the way the market making algorithms work. They're the ones in charge now of handling the risk of market making stocks. And so what we notice a lot of times is they love to take it down and shake the leaves, see if they can find any stop orders on here where people capitulate. You know, the rookie move is to buy here and say, I'm going to put my stop in just below yesterday's low. And believe it or not, these are what the books have been teaching us. Probably for the most part, certain setups, maybe not a gap, but the algorithms are coming in and saying, okay, well, we control the market now. Let's just go ahead. We have a nice gap up. There's a lot of selling out there. Let's take it down, you know, right about here. Maybe equilibrium was achieved, but I'll tell you, these algorithms, they're OCD. They want to go down and touch moving averages. They want to go down and flip the light switch a few times and count their steps. They want to take out yesterday's low and see if there's any follow through, and that is usually the flip. This is usually where the flip occurs, especially when you zoom back out and look at that daily chart. So perfect example today. If you guys are next time looking at a daily chart and seeing, boy, I really like to enter this, but I got a feeling those damn market making algorithms are going to take it down and they're going to try and squeeze out every last open stop order they can from people who went to work last night, but they logged into E-Trade and put in their market stop orders, and then they run them on them down. Doesn't last long. Buoyancy. Buyers popping in here, a lot of bottoming wicks on those candles there, and that's really the only thing you'd really need to see if you were looking to enter a stock. and you got a feeling in the first couple of hours it's going to still test that low. That's what they do, and hopefully that makes sense, guys. But that candle right there is a significantly interesting candle right there. That was your buy point after 2 days, 2.5 days of solid selling. It wasn't ready today. It had to go out just one more time. Andy calls it the double dip. Sometimes the double dips you do, you got to go back and back up the card just one more time and see if you can get anybody else. And sometimes the second mouse is the one that gets the cheese. Mouse number 1 up here chasing, mouse number 2 waiting for the HFT shuffle to occur. So hopefully that makes sense. The last week, I'm going to do a quick look at sectors because we've got some stuff we can look at. I don't know how much time we have. Let's see here. Sector glance. Let's look through the sectors and see if anything sticks out. Now, I will say that last week, guys, we talked about silver. I thought silver might try and play a little catch up to gold, and hasn't really done too much since then. It's still making some interesting gyrations, but pause. Silver minor had a nice push and then pulled back today and kind of did the same thing. Look at that perfect example of what I just talked about. Took out yesterday's low or matched it by a penny and then took off. But back to sectors. Let's see if there's anything notable out there, or does everything look the same? Steel, got a really nice pop, and we'll take that. That's our U.S. steel. Natural gas, stay away from that. Gold miners, I think they're setting up for another possible move here. So we've got to keep an eye on the GDX and the GDXJ. Big, nice move higher, pullback. This is kind of what I'm expecting our market to do, guys, right? Big bounce up, nowhere to go but back in the pocket a little bit, settle in, build a new base camp and move higher. Keep an eye on the gold miners. I think they could get interesting. We'll just see if everything else looks the same. I'm going to zoom out a little bit. There's our gold miner, bigger guy. What could finally happen? This moving average could come up and force the issue tomorrow, guys. Maybe the price opens up and gold sells off on the open just enough to get these gold miners to touch that moving average line as an ETF, and then maybe that's the spot at which we start looking for a round 2.0 gold miners. That looks like everything else. I have a feeling a lot of things are going to look like everything else. Interesting, the banks didn't rally a lot. The banks have been kind of sideways the last few days. That's notable. So the financials have had a bit of a rough time participating with everything else. There's a great example of what the market did. The semis led the way today. But boy, Andy, when we set some alerts today, I had every chart looks like this pretty much. And
oh yeah, I believe it.
There's going to be a lot of shorts being set up today, to be honest with you, and because that's all that's being given. I'm not going to shoehorn or force something else, but there was almost too many to choose from. Every chart kind of looks the same here. We looked at that one ad nauseum. Looks like the NASDAQ. Gold is the only thing that's really moved, pulled back, and set up. Everything else looks kind of extended, or it didn't even participate that much in the rally. Oil looks terrible. Oil looks like it might want to go lower. Oil looks like it might go lower just based on that weak bounce and the moving average fanning out and coming and pushing the price down. I bet oil goes lower tomorrow. Or overnight, I should say. No bounce in at all in biotechs. Biotechs have been dead lately. I don't think there's a lot of headwinds going on for biotechs. There's our solars that we talked about a lot last week, and they've just been creeping higher out of that nice wedge that we identified last week, guys. If you remember, we said watch the solars. They just look like they want to go, and now they've gone. Now they look tired.
Now they've gone.
Now they maybe want to come in and pull back a little bit.
Mm-hmm.
Getting to the bottom of the barrel here. That's pretty much it. Everything else is really extended. So USO oil wants to go lower, I think, and gold miners might want to dig in. And if you think about it, it's a defensive play. If we get a pullback in regular stocks, the buying stocks, the 401ks, the mutual funds, they still got to put their money somewhere on the buy side. They could easily come in here and start to come into a more defensive play because there's definitely something happening in gold. I mean, we talked about gold.
Yes. If we're going to have another rate cut, gold should go higher, but it's hard to trade for sure. But yeah, But you have to watch Bitcoin. I notice there's a direct correlation with Bitcoin and gold. So if Bitcoin starts to rally, I've noticed a lot of times gold will sell off. So you got to keep on that. Put on is it GBTC?
Is that it? No.
No, G Bitcoin. Yeah.
You can tell I don't type that very often.
There you go. Yeah. So it's looking like it may want to fall over more, and if that does, You can see just
inverse
moving just the
relationship.
opposite of gold.
Inverse, yeah, inverse
Mm-hmm.
of gold. Good point. All right, so let's look at the strategy or the price alerts that were set last week, and I'm going to sort them. I'm going to sort them by percentage gained. And boy, like I said last week, I might have to start charging for these webinars. Here's 11% in PAGs. Beautiful 5-day move off that. Didn't take long to trigger and didn't look back. Beauty. PAYS took a few days, but it finally triggered, and then you got a gap up the next day, a little bit of follow through. Roku, a little different story in Roku, big gap.
Yeah.
Doesn't quite tell the whole story, unfortunately, in Roku, but the setup was there nonetheless. ARWR. Now this is the last week we were looking at a lot of these A-table setups. You know, look at these charts. They all kind of look alike. They're all solid. They're all trending up. They're all looking decent. But I don't trust these types of charts going into what we now have in the backdrop of the market. SEDG, another solar that kind of crept higher along with the solars. KT was a short from above, and even that one worked. The only one that didn't work looks like this Zagnet bar, whatever this crazy thing is. Just can't get out of its own way down here. So definitely good alpha last week with those, but we're going to delete those, and I better not delete the ones I make at the end like I did last week. As I said, Andy, I had more than I really even know what to do with, and I'll just kind of give you a quick glimpse. I took the pullbacks to the 20s and pullbacks to the 50s and reversed them. That's not that's not the one I want. And there's just more items on there than you could even imagine. Where are we? Flipped. Those are the ones I want. So we'll flip above 20. A lot of them there. Flipped above 50, I think was the other one. We'll go over here. Ton of them in here. I mean, look at all these. A lot of duplicates too, but these windows are just absolutely loaded with everything that just looks the same. Bouncing off lows, running into interesting averages. So I spent some time before we went live. I'm going to pull these back down there because it's just too many to look at. And we're going to go through them. What's this? Oh, that's my price alerts. We'll keep that open. All right, let's go ahead and start. I only have one and only one from the last week's A table, ARJD, for whatever reason. I'm sorry, AJRD. For whatever reason, this one did not participate much, and it's got kind of a upward looking, stretching its neck bull flag going, being repelled by, quite honestly, if somebody wanted to watch this, if this opens up tomorrow and just jams down and does its OCD move and tickles that moving average and flips the light switch a few times and then starts to bounce, that could be a very interesting entry because you're leaning on that moving average. But otherwise, we're just going to do a breakout like we did every other week. This is going to be the one and only long of the day. So at 87, we'll mark this one up. And again, it's going to be the one and only long because they're just not there. We're not going to chase things that have been running for 6 days straight. So there is one long. Now we're going to move on to about 10 shorts.
Whoa.
Yeah, we're going to go quick. They're all going to look the same. Everything looked like this, but I had to try and find some of the best looking ones that I could for certain reasons. This one is tied up here at its moving averages. And what we're going to do is we're going to wait to short for tomorrow. So we don't want a red bar ignore where we've just got a continuation pattern. So this is our signal candle. We're just going to go off the low of these red. They're all pretty much going to be red candles or topping tails. So 82, we'll go short at 82 on this one. And again, I've got like 9 more of these to set. So, if somebody wants to type in, we might have a little bit of time to look at 2 or 3 stock charts before we call Scott back in. We can do that. All right, so click was one. Tupperware, aside from being, your mother's, what the heck just happened? Oh, I touched a channel. That was weird. Go back to my...
You didn't lose your price alerts, though.
No, I didn't lose my price alerts. Let's go back to my default layout. Tupperware. All right, Tupperware. Another downtrend, lower lows, lower highs, getting caught right up in this fanned out moving average. 10-20 period would take the low of this candle, 33, and mark it up at 33. And this is what we're going to do here for the next 9 alerts. Again, there's nothing. Yes, that's a short alert. Nothing to be forcing the issue right now, the way the market closed. Let's go EVR. Another really nice bounce right into some moving averages. Perfect doji today. I'm going to actually use yesterday's low on this one. Go 33. Same really concept applies in all of these. Momo, what a great name to go and short the Momo, right? Jump in front of the Momo and short that. Nice bottoming tail. We're going to go through today's lows on this one.
Topping tail.
Topping tail, thank you. 83 is our number. That's a penny below yesterday's lows. Now, this is a big difference between shorting yesterday's lows after bouncing 5 days and shorting yesterday's lows after, okay, so this one's already broken. We're going to have to reset this one. Nothing wrong with looking at yesterday's lows here. We'll go right about there. We'll just eyeball it. Because we've got 5, 6, 7 days of running up as opposed to shorting this day. What I'm talking about, guys, is looking at this day right here. Oh, it's a new low, look short, and then boom, you just got blasted. So the safer entry is to wait for the stuff that we're doing today, and we're just going to hammer it home here. Next one is going to be APTV. That right, tagging the 200-day, which also the 200-day had a lot to say in the price action back here. Therefore, I assume it's going to have something to say the price action here today. So we will go below this candle. I'll just use the intraday here and draw it up. Actually, I'm going to do this day right there. I'm going to eyeball these, kind of using the intraday charts. HBI, about halfway through these. Like I said, there's going to be a lot. And see, they're all looking the same. I'm just going to come in here too. I'm going to come in here and use that low right there. Some of them are tight, some of them are a little bit looser, but we're going to get the general picture. All right, and then we got PSEC, PSEC. Big bounce recovery. I'm going to take it. This is a $6 stock. I might do 654. All right, we got a few more. Airlines. AAL. No, that's not airlines. My bad. Yeah, American Airlines Group. Thank you. Big wick yesterday, topping wick. Started to give some back today. I'm just going to put it through today's lows. And we're going to short American Airlines if it breaks tomorrow. All right, a couple more here. DK being one of them. You can again, guys, you're seeing every single one of these daily charts looking very similar. Take it up that low, that wick right here. And then last but not least, rental cars. Hertz rental car. Resuming possible downtrend after a big wick today. We'll just go ahead and use intraday. I'm going to use that level right there. And that is our primary list, as you can see, of short sells. And again, why are they mostly short sells? This market is just not giving up after a giant bounce in the backdrop. Most of the scans and the settings look similar, and these just aren't setups to try and trust. We got to wait and see what's going to happen. And so the fact that my short side scans after bouncing up and everything that we looked at today were just chocked full of, not hundreds, but tens of them, 30, 40, 50, a lot of them. I had a really hard time choosing some of the best ones because there's a lot of them up there, and it just tells me that's where we are in the general scope of things right now. So let's carefully highlight and not delete. Share. Copy. Okay, guys, so we're going to drop these price alerts into the GoToWebinar chat window. I think I saw at least one chart request to take a look at. There you go. There's the price alerts. You can use the cloud to take those and pop those into your own screen. All right. Okay, well, a couple questions. What scan would you suggest to find those stocks? Well, they're basically, if you have, here's what I did, Waleed. I mean, I've got these scans that I'm not going to save my price alerts. I mean, I'm not going to save my, here we go, pull back to the 20 and pull back to the 50. Oh, they're there again because I reset my, I didn't save my my layout, and I didn't want to. So here's all I did, Waleed, is these pull back to the 50s and pull back to the 20s. I think you can get these on channel 4. Look at what this, we got just a few ideas here. Not a lot of ideas, but when we go in here and we flip it upside down, so in other words, they're not pulling back to the 50, they're bouncing to the 50. Hit the flip button, okay. All of a sudden we got more than we know what to do with here. So, I'll just give this to you as is, anybody else that wants it. This is essentially where we found all these price alerts that we just set. something like this. But again, man and machine, guys. The machine gives us the list of good ideas, but the man, the human being, the female, male trader, what have you, gender neutral trader, you still got to go in and make decisions. And that's how we do it. All right, Julie had a question. Andy just answered. Cool. All right, so I saw a chart. We'll come in here and take a look at AYR. And if there's any other chart requests, we can take a quick look. Nothing to look at there. I'm going to zoom out. I see a very long, protracted trading range, and so I'm sure you're seeing the same thing. The first thing I'm going to do is I'm going to look at this high right there, 2109, and I would say you probably want to set a price alert for 2110. And if it breaks out, first thing you're going to want to look at is how's the volume? What's the relative volume today? Is it above 1.5? Is it good relative volume? What are the 5-minute and 1-minute candles showing you in volume for confirmation? And hopefully, if you do get that price alert, it's in a holding pattern here. And the other thing is, it's had 3 or 4 days of a head start of a run. I tend to not trust those as much as if this was going sideways just underneath our number of 2110. So whoever asked that question, 2110 will be an interesting level to watch, but it's expended some energy getting there. But on the flip side, it's a very long, protracted range, and sometimes those long, protracted ranges can have a lot of potential energy built up and actually follow through. All right, and Hal wants to look at AA, and this might be the last one. Then we'll bring in Scott here in a minute. Alcoa struggling when some of the other metal stocks are doing decent, ugly. Look at how Alcoa has been led to the woodshed down here by the moving average, the 10 period. It had a chance today. It actually closed right on its 10 period. It's still a few days away from maybe trying to do what X did, right? X bouncing, getting above that 10 period, getting that 10 period to flatten out, testing it on a few downside wicks, and then moving and lifting out of it like a bird coming out of the hand. AA might be close to that, but it's nowhere near that today. It's pretty messy down here. Anything you want to add to that, Andy?
No, I agree. And a lot of times they will kind of trade together. They're both metal stocks. So, yeah, one to keep an eye on, but you have to define your risk, and you have a really easy definition there, man. If it takes out that monthly low, you're just out.
Somebody snuck in here, Seagate, one more technology. This was a great stock in the 80s and 90s, but the world has kind of moved on from Seagate Technologies. I'm sure they're doing something right, but are they making any money? Yeah, they're making money. So they're doing something right, but the problem is their stock just doesn't look that great. It's really getting held down here the last few times by the 200-day moving average. It was support here, it became resistance here, resistance here, resistance here, fake out here, and then it's just resistance yesterday and resistance today. I think if this thing can post a closing candle, it's not much to ask, just one simple closing candle above this 200-day moving average, then you might have something to get excited about. But for now, it just seems like it's being really, really dominated by that particular moving average. But in the bigger picture, we could always go back and look at the time frame of the weekly just to see. It doesn't look too bad. I mean, it might get ready to make something. In the big picture, that's what it's doing. Big old wedge right there for the most part. Maybe Seagate has some good things to come, but that's a weekly time frame, so that might not be your ideal time frame. All right, so that's it. I'll bring the slideshow back up for Scott, and thank you all for your questions and your time, and we'll see you next week until Scott has an announcement here.
Thank you. Yeah. A couple items on the way out. We do have a podcast that's pretty much weekly, so make sure you get the next episode by subscribing to it. Just search for Trade Ideas Podcast wherever you listen to them, and there you go. Add us. We've got a new set of eBooks. Just go to trade-ideas.com/setup. Both Steve and Andy contributed chapters. We've got one on swing trading, another on active investing, another on range breaks and pullbacks. Each one comes with 2 chapters and some cloud links and other good stuff. Go ahead to that trade-ideas.com/setup and put in your email address to get the download links. June Boom is the code this month, all caps. It's case sensitive. You can use that either for any new subscription, Brokerage Plus, or an upgrade. If you're already a subscriber, just log in from the homepage in the upper right and do the upgrade. Or if you're not yet a subscriber, just click on pricing and plug that in. If you have questions, email us info@trade-ideas.com. That is the best place to send any of your questions because it goes into our help desk software and gets routed to the right team members. So use that address. You can follow Steve on Twitter @TodayTrader, also at Trade Ideas, @QuantBot, some other handles. Facebook.com/TradeIdeasPro is the Facebook page to follow so you can share stuff we post on there with your friends. Thanks, everyone. Thank you, Steve. Thank you, Andy. We're going to have a recording up later on tonight or tomorrow after it gets converted and uploaded, so keep an eye out for that email. Thanks, y'all.
See you next week.
All right. Thanks, everybody. See you Thursday.